Good morning everyone and welcome to this seminar on Companies Act, where we are going to or the faculties today are going to take us through the implications of Companies Act in the statutory audits. So we have CA Srihari, who is our speaker for the first session. I request our chairman Pramod Reddy to welcome him to the dais and also greet him with the floral bouquet. Welcome to you, Srihari. I request Chairman to give his welcome address.
Good morning, my dear members. Welcome to this one-day seminar on Companies Act. As all of us know, Companies Act is very crucial for our profession, and considering the timing, Companies Act, I think we are going to all have started statutory audits or in the verge of starting statutory audits. And this one being the statutory audit season, I think we should be well equipped our provisions. And while I was looking at this seminar, we know that Companies Act is pretty old. There was 1956 Act, then came the 2013 Act, and the 2013 Act, the way it was enacted and the way if you see it's over a decade, and you can see how a rat has become an elephant rather, or an elephant to a mammoth. I think rat is not the right word to use, elephant to a mammoth. So this was the context in which when we were looking at, when the committee was sitting and we decided what do we do in Companies Act. It is like we've been completely every year we've been doing the seminars on the Companies Act and quite a critical aspect. We were also looking at the auditor's responsibility when we were looking at it, and the CARO, basically the audit trail, and this was already done and quite a lot of session were done. So we picked up very crucial subjects, selective subjects, let's say, which are still relevant and which requires quite a lot of our attention. So this was the reason we came up with this today's seminar. I welcome you all. If you're looking at how the agenda of today's program will be dealt is firstly on deposits. CA Srihari will share his insights on those deposits and their intricacies in audits as well. Post that we have CS Tirupal George, who will be taking registration of charges and borrowings. Post that, then we have CA Punarvas, who will be taking us through loans to directors and intercorporate deposits, which are very crucial on the acceptance of deposit rules and how do we navigate those complexities and quite a lot of borrowing challenges which we see in our day-to-day scenario. And as I said, it requires quite a lot of detailed deliberation discussions. Rather than sharing the thoughts by the speakers, I would always encourage our, always, the doubts which we ask gives us a more perspectives and the more way to discuss a subject. So I would always encourage you to discuss in this seminar so that everyone can get insight about this. Thank you and welcome once again.
Thank you, Chairman. Before we inaugurate the programs formally, I would like to introduce the speaker for the first session, that is Srihari. Srihari is a member of the Institute of Chartered Accountants with more than 10 years experience in handling multiple complex statutory audits, internal audits, and he has rich practical experience in advising and conceptualizing and implementing various tax optimizing structures and providing litigation support to his clients. He specializes in the areas of audit and GST. Apart from this, he has a wide range of experience in statutory audits across industries, internal audits, outsourced CFO service, process audits, and so on. So it's a pleasure to have Srihari with us, and thank you for being here, Srihari. Welcome to you, and that's Srihari for you two members. So please give him a round of applause. We'll now inaugurate the program with lighting of the lamp. I request Srihari and Chairman to come over to the lamp, and also request our MC member Tuppa to be there. Focus on.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामोषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः तस्मिन् लोषः शतः सर्वे तदूनात्यरीतश्च नान्यतीतश्च एतद्वैता 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 एतद्
Very good morning, everyone. Hope I'm audible. Today's topic, over the next 1.5 hours, will be covering these topics on deposits by the companies. Okay. So before I start with this, let me just give you a brief idea about what Companies Act has regarding deposits. Okay. So basically, in order to be precise, from section 73 to 76. Companies Act talks about deposits. Okay? It's 73, 74, 75, 76. So 4 section it talks about deposits. Clear? Now, before I start with this issue, what ideas do you have regarding deposits? Because Companies Act says too much of things about deposits. So what according to you is deposit, sir?
Amount received by company from the public.
Amount received by the company from the public.
Apart from the share capital.
Okay. Apart from share capital, whatever they receive from public is deposits. Okay. What else is deposits, sir? Because me reading out these sections would not help unless we know what is deposit and what is the intention of these sections.
Any receipt of loan or advance,
Okay. Any receipt of loan or advance?
other than from directors and relatives of shareholders.
Okay. So basically, sir, apart from directors or shareholders, you receive money from any outsiders. Correct, sir? Am I right? So that would be treated as deposits. Yes, sir. What else, sir? What is deposit?
I think in some cases from director also it will be amount to deposit.
Fair enough. Some cases, if you violate a provision and receive it from directors, that also may amount to this thing, deposits. Fair enough. What else, sir? Sir, because I tell you, deposits.
Shareholder, it is deposit. Sometimes it comes with that also.
Which one, sir?
Shareholder giving something.
Shareholder giving some money may also amount to deposit.
Certain cases.
Some cases, fair enough. Some cases. Sir, why am I asking you this doubt of depositors? We have a notion in mind, sir. Whenever we look at the term deposit, we have a notion in mind. Sir, this is the money taken from outsiders. Sir, generally these provisions will be applicable to private companies or public companies?
Private.
Deposits can be taken by private or public companies? Public, correct? Well, whatever notions we have generally regarding deposits is, the first notion we have is any amount received apart from directors or shareholders would be treated as deposits, okay? And that can be taken only by the public companies. So these are the few things what we have in deposits. Sir, many of the things, okay, just to give you an example, we take an advance from a supplier. Suppose you're auditing a company, clear? You take an advance from the supplier and you don't supply the goods to them within some 365 days or not, that also can be a deposit. Deposit is a very wide term which the Act gives you. Section 73 to 76. Though it may seem only 3-4 sections are covering deposits, there are a wide range of things which are covered under this deposit, which we may not even think that's a deposit. Clear, sir? Sir, this session let me take up with two views, sir. One from the view of the company, second thing from the view of the statutory audit. Because since the agenda for the day is regarding statutory audit thing, so when we are doing the statutory audits, the areas where we are missing out, okay, or the areas where we think it is not a deposit, but that could be, possibly that could be a deposit, which we are missing out on a few things. So that I'll take through. The second thing in the session is, we'll be covering the sections. Along with that, we'll also be covering the rules, because when you come to deposits, the section looks very simple, but when you get into the rules of that, there are many things which are said in the rules. So we take up the rules also along with the section. Clear? We get a complete picture of what is deposit and how is it. Clear, sir? So the agenda for the day is, initially we take up what is deposit, because once we conclude something as a deposit, section 73 to 76, all the provisions get applicable to that. So first of all, we have to know what is a deposit, and if at all it is not a deposit, we need not worry about it at all, because none of these provisions will be applicable to that, because that's not a deposit. Clear? So we'll spend our time initially for a few minutes on understanding what is a deposit and what is not a deposit. That is the first agenda. Second agenda, sir, once we conclude something as a deposit, then we understand, was the company eligible to take the deposit? Because I'll tell you, sir, we may be of the notion that only public companies are allowed to take deposit. There are a few things where the private company also can take a deposit. Okay? So it is not that only public companies can take a deposit, but from whom do we take? How much do we take? Based on that, it decides whether we are compliant to this section or not. So the first agenda is we learn what amounts to deposit, which all things are deposits and which are not deposits. Clear? The second thing we come up is, if at all it is a deposit, was that company eligible to take? Now we conclude that a company is eligible to take. Next we decide the procedures that has to be followed in order to take a deposit. Is all those procedures followed and then a deposit is taken, or it is just taken? Clear? So this could be the agenda for the day. We'll start off with what is a deposit, and then we'll go ahead with the next things. Clear, sir? So the section what gets covered is, this is the overview. First we learn what is deposit. Next we come to section 73. Section 73 governs with taking a deposit from members. We take deposits from our own members. So if at all you take deposit from members, that is covered under section 73. 74 will come at last. After 73 we'll go to 76. 76 is a section which governs deposits from outsiders, from the public. Not from the members, but from the public. So the major sections what we cover here is 73 and 76. The other two are very small sections. Few of the things are penal provisions, so which we'll cover it up at last. So the major agenda, we take up section 73, which is a deposit from members. Section 76, the deposit we take it from outsiders. So these two provisions we read. But before that we get into, what do you mean by a deposit? Clear, sir? Sir, if at all we have to take from a statutory audit point of view, you could just imagine the liabilities, equities and liability side of the balance sheet. So once we start auditing, we take a trial balance and start auditing it. The equities and liabilities part of the balance sheet, if at all you just visualize. So in that, what all things would amount to deposit and what not, that will be covering up first. Clear, sir? Sir, your section 2 definition says, what is a deposit? Sir, it's a very dangerous section, I tell you. Because you read the section, it's just a 2-line section. They say, deposit includes, sir, first of all, it's an inclusive definition. Deposit is a wider term, and that includes, so there we have to be very cautious because it's an inclusive definition. That means all the terms which amounts to deposits are deposits, which includes, they say, any receipt of money, they use this word, sir, any receipt of money by way of deposit, or you call it as a loan, or in any other form by a company. The second line they tell, but does not include such categories of amount as may be prescribed in consultation with RBI. So second line we will leave, because they say in consultation with RBI, if at all we conclude these things are not deposit, those things are not deposit. But apart from that, giving the main focus to the first line, sir, it says deposit includes any receipt of money by the company, whether you call it deposit, whether you call it as a loan, or any other form by the company. Sir, that means, just to give you this thing, if at all we read only the definition, sir, any receipt of money as in share capital is also deposit.
Yes.
They say any receipt of money by the company, they use this word, any receipt of money by the company in the form of deposit, in the form of loan, or in any other form. Sir, in that case, if at all we look at the definition, is share capital also deposit?
It amounts to.
Question number 2. Sir, I go to SBI. I need a business loan or a term loan. I go to SBI, borrow some 50 lakh rupees from SBI. Sir, they say loan is also deposit. So in that case, does that mean I go to SBI and borrow some 50 lakh rupees of loan, then I have to follow these procedures of 73 to 76?
Not include amounts prescribed by RBI. So loan may not be prescribed.
Loan may not be prescribed by RBI. Okay. So what am I trying to tell, sir? Sir, in that case, you take an advance from the customer. Just looking at the definition, if we start analyzing it, you take an advance from the customer. You are a trader. To supply goods and services, you take an advance from the customer. They say any receipt of money in any form. So that advance may also be deposit and you have to follow all the procedures from section 73 to 76. So that is what it means if at all you read the definition. So in order to understand what is a deposit, sir, we have to learn what would not amount to deposit. Clear? Because what is a deposit? Sir, going by this definition, you look at the equity and liability side. Whatever things are there on the equity and liability side, everything can be deposit. That's what we understand by looking at the definition. But what is important here is, sir, we have to understand what is not a deposit. Sir, next I'll be taking you through 16 points. Okay, we have made it in a way that it could be easy for you to remember. Sir, the next 16 points, whatever we discuss, those 16 points are not deposits. Sir, apart from these 16 points, if at all you find any amount on the equity and liability side of the balance sheet, that is any receipt of money you do, that will amount to deposit. What if it's a deposit, sir? Let it amount to deposit. What if it's a deposit? Sir, once it is called as a deposit, then all the rules and regulations from section 73 to 76 start getting applicable to that. Okay? So now the agenda is in order to understand what is not a deposit. The next 16 points, whatever we discuss, will not be a deposit. Sir, once it is not a deposit, don't follow this section 73 to 76. You may completely ignore this deposit provisions. Once it is a deposit, then we'll follow these things. Clear, sir? So we'll first understand what is not a deposit. Clear? Sir, before we go into that, we'll just look at it, some important 4 points we have given there regarding deposits. So the first point they say is repayment of deposit is always time bound. When we read these provisions, you'll understand within what time should I repay. Sir, let us assume, sir, I call it as a deposit and I take a deposit. I'm a public company. I call it as a deposit. Use general understanding is public company can take a deposit. Now I am a public company, I take a deposit. And can I tell, I'll repay it after 10 years? Or whenever I wish, I'll repay it. Can that be done? No. Whatever sections we read, the very first primary thing they say is, any deposit for that matter is always time bound. Time bound means any deposit you take, that has to be repaid within the time limit prescribed. What is prescribed, we'll come to that in the next sections. Clear, sir? The second important point we have to remember is, if at all deposit is a secured deposit, I mean, what is a secured deposit?
Secured with someone, sir.
You take a deposit, you give a security. Sir, whatever security you give should always be a tangible asset. Sir, few of these startups, tangible asset.
Can't you give again intangible?
No. It's a major mistake which some of the software companies are doing it.
Yeah,
Sir,
it's written definition.
yeah, it is written. We'll come to that. This is just an important note. We'll actually read the definition. Sir, few of the software companies, even in my clients, some of them do that. Sir, we have a patent, we have a website. I paid some 30 lakh rupees for that domain name and I've taken that. That's my intangible asset. I'll give that domain name as a security. Sir, can you do that? They say no, you cannot do that. Intangible assets cannot be given as a security for any deposits. This is one important point. Anyways, we'll again cover this later.
Then Google cannot raise money from Google.
Google building, if at all they want to give it as a security.
Sir, I'm seeing website, google.com is a website. Not possible. Which God, which kind of stuff?
No, Jugaad. This is not possible. Because I tell you, we took up this case in one of our clients. They were a software company. They valued at around 250 crores. The company valued at 250 crores. But they had zero tangible assets. They had no tangible assets. It was just the valuation of the company. Generally, the startups work like that. So they were like, we'll give this as a security and take money. So that is not allowed actually. Intangible assets, you cannot give it as a security. So this is one important aspect. We'll come to that. When we come to sections, we'll understand that. Sir, but can it be unsecured? I have no tangible asset. The people I know are ready to give a deposit without a security. Can I give it without a security? You can give it, sir. giving an unsecured deposit, issuing an unsecured deposit is not a restriction, that can be done. But if at all you're doing it as a secured deposit, it has to be against tangible assets.
Secured means tangible, that's all.
Secured means tangible. If you have nothing to give, issue in this thing, unsecured deposits. That is allowed.
But is there any restriction on secured amount?
No, we'll come to that. It is not on the basis of secured or unsecured. It is on the basis of what category of company you are. There are restrictions. That amount restrictions.
Nothing is there.
I'm sorry.
Based on secured and
No. Based on secured and unsecured, it is not there. We'll come to that sections. Based on what category of company you are. Based on that, there are restrictions. You cannot take how much ever deposits we want.
That is separate.
That is there. We'll come to that. Section 73 to 76. Whenever we read, we'll understand that later. The third thing they say is private companies can take deposits only from its members. That is your section 73. That's what they say. If at all you're a private company, you can take deposits only from the members. Private companies cannot go to public and raise money from there. Okay. So if at all you're a public company, you can raise money from public, but subject to the rules which are laid down in section 76. Yes. This is just a briefing of it. Once we come to the actual sections, we'll
Follow
read.
rules. Just members, that's it.
Who's a private company? Yeah. Private company can.
Rule, separate rule for them.
It is there. Section 73 is for them. If at all you are raising money from these.
Similar public company have to follow rules and then raise money like that.
It is there. Section 76 lays down that. 76 says you have to follow these rules and then raise the money from the public. That is
for public. For private, there is no.
it is section 73. 73 speaks about the rules by the private company. Two sections. 73 is from the members. 76 is from the public. So private companies, since they cannot raise it from public, only section 73 will be applicable.
So we need to make him the member first and then we need to raise money, or how it
That is planning.
That is jugaad.
That is what, because we
That's
have
what we
raised
did.
money already. Now we need to make him the member, because last year itself we raised money in the March itself.
Sir, before you raise, you have to make him the member.
No, but it didn't happen, sir.
Then it's a violation.
It's a violation, that's it.
Again. Once we come to that section 73,
sure.
there are a few private companies which are exempt from following such rules. If at all you are a startup, then for the 5 years or 10 years there is a rule. Or if at all you are a private company raising a deposit less than 100% of your paid up share capital, free reserve securities premium, then there is an exemption category.
Okay.
We'll check that. If at all your company, your client comes under that exemption category, then even though they have not followed these rules also, that's fine.
Okay. Sure.
But not from outsiders. They should have raised it from members. Again.
So we need to make him the member first, but we didn't have that thing now. That's what we need to do.
Violation.
Okay.
There are huge penalties for that.
We'll have to discuss.
Right, sir. So now we'll start off with the actual definitions. Sir. What is deposits? We know. The next 16 points, whatever I read, is not deposits. So if at all it is not deposits, nothing to worry. You can take it. None of these provisions from 73 or 76 will be applicable to that. Yes, sir. So the first thing they speak about is government. Sir, if at all you take any amount from the central government or the state government, clear? Or further they tell, if at all you take any money from local authority, that will not be amounted as a deposit. Any amount of money, you take it from central government, state government or local authority is not a deposit. Sir, next state statutory authorities constituted under the Act of Parliament. If at all you take money from any statutory authorities which is formed under an act, that also will not be amounted as deposit. Third is very important point, sir. If at all you raise some money, let us assume your client raises some money or your company raises some money. If that money is guaranteed by the government, in case if that is the case, then also, though you raise it from a private person, but the repayment of that money is guaranteed by the government, then it will not be a deposit.
Like airport authority we take, it's not.
If that repayment should be guaranteed by the government,
Yeah, airport authority, government will guarantee.
then it is not a
So,
deposit.
purchase something, government will guarantee.
Correct.
Given.
If government guarantees, then it is not a deposit. We need not worry about it.
Now it is privatized.
Correct. So either government has to directly give you,
Or railways,
or someone gives you, for that government stands as a guarantor.
IRCTC or Metrotech and.
Yeah. In that case, that money will not be amounted as deposit. So we are free to take that.
Anyone can take.
Yeah, right. Company, basically, any company. Private or public.
Yeah, it's not company only.
Yeah, private or public, any company.
That's not deposit.
No, it is not deposit. Clear, sir? First thing. Second point, sir, they say any foreign source you take, any money raised from a foreign source. Sir, many of the times people don't understand this point properly and they feel any money you get from a foreign source is not a deposit. They'll have a private investor in foreign, or they'll have a related person in foreign who deposits in the company, and they feel it is not a deposit because that's from a foreign source. But if at all we look at this section properly, sir, not all foreign sources are exempt. They tell any money taken from a foreign government, like how the first point covered Indian government, any money taken from a foreign government, or they say foreign or international bank, it should be a foreign bank, or multilateral financial institution. So basically, sir, any foreign banks or any foreign government gives you the money, only then it will not be treated as a deposit. It is not that people just come up with this point and they say, sir, we have this foreign source is not a deposit. Not like that, sir. You take from a foreign person and you are exempt from the provisions and deposits. No. Only from the government or banks, if at all you take, only then that will be
World Bank,
exempt.
World Bank is
Yeah. Not a deposit. You can take. If they are ready to
major
you can
product,
take.
the World Bank gives for major product
Not a deposit. World Bank is not a deposit. Clear,
because
sir?
of this only.
Because of this. Because of Clear, sir? But one thing here we have to follow is, sir, any foreign payments you receive, that will be subjected to FEMA. Sir, why are these people not worried in the depositors? FEMA rules is much more stricter than whatever they are speaking in section 73 or 76. So we'll come across such points. Wherever there is RBI, there is FEMA, there is SEBI. Companies Act is sitting squat. They are like, you take care of that, we'll not enter that particular thing. So since these things are covered under FEMA, so these company deposit rules are not applicable to this. So second thing is foreign banks or foreign government. The third bunch is local banks and local governments. They say any money raised from this thing, any as a loan facility from any banking company or SBI or subsidiary or cooperative banks or even public financial institutions. So what is this public financial institutions? Bank, we understand. What is public financial institutions?
CFC, REC, like that.
Or any company which is not a bank. For example, you'll have this Bajaj Finance.
NBFCs.
NBFCs. So these kind of things, if at all you have, you can raise money from there, you can take a loan from there, it will not be treated as a deposit. So in the starting of the session, I asked you, going by the definition of deposits, everything that comes on the equity and liability side should be a deposit. There I asked you, you go to a bank and take a 50 lakh rupees of loan, will that be a deposit? No, it will not be a deposit, sir, by virtue of this third exemption. They say you go out to the bank, take a loan from there, that will not be treated as a deposit. So this is the third thing which will not be treated as a deposit. Yes, sir? So the fourth thing they speak about is issue of commercial papers. Okay. So they say any amount received against issue of commercial papers or other instruments as per RBI guidelines. And I told you, you can issue a commercial paper and you can raise a money. That the Companies Act do not have any objection to that. Sir, why Companies Act do not have any objection is, if at all you are issuing a commercial paper, RBI has a concern. So there is RBI who is more concerned about issuing of commercial papers. There are restrictive provisions under RBI Act. So since RBI is taken care of this, the Companies Act is not worried, and by issue of commercial papers you can raise the money without calling it as a deposit. This is your fourth point. Yes, sir?
But it will be called as commercial paper in the balance sheet.
Yeah. Balance sheet you have to disclose it as a commercial paper.
Separate from deposit.
Yeah, correct. But anyways, disclose it. In balance sheet we give a separate disclosure for it.
Yeah, as a liability side we include as a commercial paper.
No, you show it under long-term borrowings. Non-current liabilities you show under long-term borrowings.
And schedule we
You have to disclose. Definitely you have to disclose.
separately commercial paper.
Separately you have to disclose. Commercial paper separately you have to disclose.
Commercial paper separate, deposit separate.
Separate. Anyways, we give much more clarity. Even under deposits, we give a breakup under schedules and we give a clarity for that, notes for that.
So if we means accept money from directors HUF, will that be categorized as
We'll
deposit?
come. There is a point on directors here.
Okay.
So we'll cover it. That is the point where most of the companies are doing a mistake.
Correct.
I'll come. Sir, if at all we are caught under that, every company should pay penalty for not complying with this deposit rules.
Correct.
We'll come to that 7th point. So these are simple points. 4th point is issue of commercial papers. Clear, sir? So the 5th point they speak about is intercorporate loans. What is intercorporate loans, sir? I am a company. I borrow money from one more company. So that they call it as a intercorporate loan. Sir, why are intercorporate loans not covered? Because I think it will be your next session on borrowings and all. So you have other sections of the Companies Act which speaks about intercompany borrowings, intercorporate borrowings. So there are rules prescribed there. There are restrictions and rules for intercompany borrowings. So under deposits, they are keeping out of that. If you borrow any amount of money from other company, intercorporate borrowings, that will not be treated as a deposit. Clear, sir? This is your 5th point. This is an important point, sir. It is on application money. Maybe you may feel that this is a redundant concept now. None of these companies are taking up application money. But we are aware of application. What is application money, sir?
The company is issuing shares, in parts they will be receiving money.
Correct. Initially, at the time of first receipt of the money for the application time, they would have received from money. Correct. That you call it as an application money. Sir, if you look at the balance sheet, we may have a line item where it says application money pending for allotment. We have this line, application money pending for allotment. Sir, we mostly ignore that part. Because that comes under share capital, then you have application money pending for allotment. We ask them, they'll tell, yeah sir, it is pending for allotment. One dangerous point is this. Sir, if at all any of your clients has this application money pending for allotment, this rule says you have to allot shares within 60 days of receipt of that money. Sir, you have that money received, application money, you check the date, sir. Whenever we go to audit, we check that from how long is it pending. Okay? It has to be, the shares has to be issued within 60 days of receipt of that money. Sir, in case you are not able to issue shares, many of the cases that can happen, you receive an application money, you will not be able to issue the shares. If you are not in a position to issue the shares, then you have to refund that money within the next 15 days. Within the next 15 days, you have to refund that money. Sir, what if I don't refund that money? Sir, if you don't refund that money, then it will be treated as a deposit. Sir, what if it's a deposit? Then they'll ask you, did you follow all the compliances of 73 to 76? Were you eligible to take the deposit? If you're not eligible and you have taken a deposit from an outsider, the penal provisions get attracted.
What is the minimum penalty?
I'll come. Lakhs and crores deposit.
What is that?
25 lakhs.
My level.
Yeah. So, this is the thing, sir. But one more thing, one more point what they do here, sir. Sir, have you seen any of the company, if they receive an application money from someone, they'll keep it for some days, they'll not be able to refund it, they'll adjust it with something else. How do they adjust, sir? Let us assume I take application from money from you people, half of it I'll refund, other half I am not able to refund, then what will I do? I'll be selling some laptops or phones. I'll give you phones. You have to pay me money for that phone. Anyways, your application money is with me. Let me adjust that application money. Only the balance you paid to me. Sir, these kind of adjustments generally they do. But the rules of the companies that say, sir, you are not allowed to adjust application money with these kind of things. So you receive an application money, you are not able to repay, allot the shares within the next 60 days. Sir, honestly, refund it in cash within the next 15 days. Sir, you cannot come up and tell your money is with me. I'll sell you the goods. Anyways, you have to pay me the money. Let me adjust that money with something else. Sir, these kind of adjustments for application money is not allowed. That is definitely not allowed. If at all any of the application monies are adjusted, be careful about this, sir. This is a red flag.
Why, sir? But like suppose that there's a shopkeeper. Can be a private limited company also. Okay. He's selling normal goods like shirts and trousers and all. And he's issuing this kind of money. He's still adjusting what's the problem?
No, sir. If at all, no. The general logic is, if at all some restrictive provisions like that are there, then few of the people would have done some jugaad. Only then they'll keep such kind of provisions. They'll take some money from you, they'll call, it will be something else. But they'll just call it as an application money. They'll wait for whatever 60 days or whatever is there. Then they'll be like, we'll assume it to be advance given for goods. They'll just change the nomenclatures in the balance sheet and they'll do all this kind of manipulations.
But even if you repay me, I have to give advance.
That's okay. It has to be repaid. Once I repay it to you, then you give me an advance, I'll give you trousers, shirts, whatever is there, I'll give it to you later. But book adjustments cannot be done.
Means exact amount will come.
What if money, some money is forfeited?
I'm sorry, sir.
What if some money is forfeited in that?
Sir, if at all you are forfeited, then that becomes your income.
Yeah.
I mean, we don't show it as money, your money lying with us. We just show it as
repayment.
Huh?
No time bound repayment.
Huh.
That technique.
Correct. So whatever amount we have to be repaid, we repay. The amount whatever we withhold as a penalty or whatever it is, that we show it as an income and we'll close it.
It amounts to adjustment. That is the reason I asked.
But sir, adjustment as in we are not adjusting with anything else. We are just promptly showing it as an income.
It's also adjustment.
No. Sir, adjustment as in the idea behind this section is, sir, they don't want you to adjust with any other commercial transactions. I sell you goods, I'll adjust with that. I'll stay in your property, with the rent I'll adjust it. They don't want to do that. But what sir is asking is, it is a straight line with this particular transaction itself. Sir, I tell you, you give me the application money, you don't fulfill a few conditions, I'll forfeit it. It is straight with this particular provision itself. I'm not adjusting with any other transaction, like a rent or a sale. I'm not adjusting it with that. So that is what is the intention of the law.
Can't it be paid with interest? Is there any?
Interest you can pay. You have to pay. Based on whatever, but there are also restrictions, sir. Going forward, you'll understand maximum interest. This is the maximum you can pay. You cannot raise money telling that I'll pay you 5% per month. Like this local companies, they do no financial companies, I pay you 4% per month. You cannot do that. There are restrictions on that as well. But along with interest.
But can't we keep it for more than 60
No,
days?
no.
Okay.
60 days, once it expires, you'll be given the next 15 days. On the expiry of 60 days, within the next 15 days, in the bank account, it has to be transferred.
If check is issued but not cleared,
And that's okay. Because the companies that says no, sir. Once it is, we have issued it, then it is our responsibility.
it will not be cleared for some reason in the next couple of
Again, question of law, question of fact. It could be a question of fact. But generally that will not be allowed, sir. They say you have to be, it has to be refilled.
In one of the case, insolvency proceedings are going against that company who has given us the deposit. Now the liquidator has told us to hold the amount with you only. Now in that case, it's fine.
Okay, it's fine. Because next will come up, they say any legal proceedings are there, then this will not be applicable.
Oh.
We'll come to that one. Clear, sir? Sir, this is one of the red flag application money, which we have to be very careful during our audits. So the most important point is directors, loan from directors or relatives of directors. Sir, I'm very sure most of the companies what we audit, on the liability side, if at all you see, there will be short-term borrowings. And the short-term borrowings, loan from this director, loan from this director. Most of the cases, the smaller companies,
Correct.
the company would not have self-generated money to run the company. The directors would have pumped in some money inside the company. So that will be shown as a loan. Sir, problem, not a problem. Just asking you, because definitely we would have come across these kind of situations where a director loan appears in our balance sheet.
Yes.
Correct? Is that okay to have that or not okay to have that?
Not okay.
Loan from that.
But these days we have been very okay with that too, sir. Director loan, we have not qualified our balance sheet because
Not okay. Company is supposed to collect from public only, from commercial transaction. We can't collect like this.
let us assume a private company. Simple one, two friends or one husband, one wife will start one private company. Initially they will not have money to run the company. Simple cases, sir. These two definitely we would have come across.
But private company is distinct from the husband and wife, no?
Correct. So what they do is, initially the company would not have money to pay salaries, to rent and all.
Yeah.
The directors will pump in money. Very common thing which happens. Directors pump.
After 10 years also.
Huh?
After 10 years
Yeah, yeah. I'm taking a very simple example. So these two directors, whoever are there, they pump in some money in the company. This money, until the company generates revenue by itself, the loan from directors will be utilized for paying of rent, etc., etc. Sir, you observe any company for that matter. Most of the companies what we audit, you will have this loan from director. Smaller companies, except this listed or big companies you do, it may not have. But the smaller or mid-sized companies, every company may come across this loan from directors. That would be there. But were we okay with that till now?
yeah, if there is a declaration from the director.
This is one point where many of them are missing, sir. Even in our office, we insist that. They'll be like, sir, loan from director, not a deposit allowed, sir. But they say, sir, you can take a loan from director. But here also there is a point, sir. What category of company you are? Suppose I am a public company. I am allowed to take loan only from my director. But suppose you are a private company. Then you can take loan from directors as well as their relatives. So private company, a little relaxation is given. Directors or those relatives, you can take a loan. But if at all you are a public company, you can take loan only from your directors. So, but if at all public company is taking loan from other than directors, directors, relatives and all, then that is not allowed. This is the first point. Second point, sir, you can take a loan from director, not an issue. But you have to take a declaration. They specifically tell, sir, at the time of giving such money, sir, one more thing, don't take a declaration at the year end. When we go to audit, we'll be like, given declaration, sir, it is not for our audit, it is for the company. At the time the director is giving money to the company, he has to give a declaration that the money, whatever he is pumping in the company, that is his own funds and he has not borrowed it from someone. But why, sir? Just a sheet of paper. Chalo, we'll give. But why is he giving that declaration? What is the purpose of this? Auditor safety, we'll look after it. But companies act, why is it telling?
Litigation thing
indirect
can
way of
come.
taking money from public.
That's the point, sir. Generally, what used to happen is like, I being a private company, you are public, I cannot take money from you. I'll keep my director in between you. Director is an individual, not governed by any companies act, nothing. He'll take all the loans from the public in his name, correct? And he showcases that as a loan from the director. Sir, indirectly, keeping the director in between, I'm raising money from the public. Get it?
That is
So,
what is happening.
huh?
That's what is happening.
So, Director has to give a declaration before he pumps in the money that it is his own money and not borrowed funds. He has not borrowed it from someone. It is his own money which he is pumping inside the company. That declaration is given.
And what will happen if it has been borrowed money?
He cannot. That will be treated as a deposit. If that's a borrowed money, that will be treated as a
Director
deposit.
has borrowed money and then he has given.
He cannot. He cannot.
Is the declaration required every year? For example, I've got opening balance this year.
No, sir. Not every year. At the time of giving the loan. Let us assume, sir, 3 years back the director gave a loan. After that, he has not given any loan. At that time, if at all he has given the declaration, that's
Sometimes it's a running account in case of small company, director pumps in, takes it back. That means every transaction we should have a declaration.
correct. Whenever he is pumping in money,
Every transaction.
transaction, yes.
There
Or
are 50 transactions during the year, 50 declarations.
or else, what generally we do at times, sir, practically what we do. But Companies Act has not addressed this issue. But practically what we do, I just tell you, we take a running declaration. What is a running declaration, sir? We prescribe a period, this financial year or the next 6 months, and we prescribe an amount limit up to 10 lakhs or up to 5 lakhs. So we prescribe an amount. So it is like like how they give a.
Where is this format data which you are following? Nowhere.
No, it's just a declaration.
No. Running declaration is prescribed.
No, none of the declarations are prescribed. They just say you have to take a declaration at the time of taking the money from the directors. But practically speaking, as sir told, sir, very small company, where every now and then, like 50 times we pump in money, we take out, whenever we require, we take. There is no corporate will, we assume we and company are the same.
Yeah.
Those transactions keeps happening between our companies. So in that case, what do we do? It could get difficult, like every time I pump in some 10,000 rupees for payment of some repairs and maintenance. So do I give a declaration even then? Practically speaking, sir, may not be required, okay, due to practical issues, but Companies Act specifically is not addressing that. Okay. But we can take a running declaration. I mean, up to 5 lakh rupees I will give a loan. This 5 lakh rupees is not from my borrowed mistake. So it can be 3 lakhs, 2 lakhs or 1 lakh. So that safety we can just have it.
But actually speaking, even for 30 rupees you have to take a.
Going by the strict interpretation of this, yes. But not required. Because the intention of the law, going by the intention is just to avoid these malpractices. So that's the intention.
But why there is a discrimination between equity and debt? If you take your money from if you take the money for equity,
Okay.
issue of share capital,
Hmm.
you don't insist on any declaration. You
Correct.
might have borrowed.
Correct.
But
Correct.
here there is a restriction.
Two
You would have
things.
borrowed money even for equity participation.
That's okay. But the intention is, sir,
But is it not a discrimination for a private limited company?
not a discrimination. Why I tell you, sir? Equity, you have more strict rules. You should have authorization. You go to, you cannot take how much ever equity you want, you cannot take. You have to have authorization. If you want to increase it from authorized capital from 10 lakhs to something, you have to pay the stamp duties, all those things. It is more restricted there. And moreover, you cannot value and you cannot tell share premium MLCD. For that also there are restrictions. So since there are many restrictions in that area, this is specifically kept to this deposit part. Because equity you have those restrictions, right, sir? You cannot raise how much ever you want, you cannot raise. There is authorized capital permission you have to take.
But there is no limit on
Always increase authorized capital.
director.
Huh?
There is no limit on director.
No, there is no. If at all he gives a declaration, no,
Declaration, you can raise 10 crore or 20 crore.
he can. But that 10 crore rupees should be his money.
Should be?
His money.
Agreed.
Then it is okay.
Money,
Then okay, not a problem.
like Ambani is floating,
Hmm.
for example, Mukesh Ambani is floating a private limited company,
Hmm.
okay?
Hmm.
Just 2 directors are there.
Oh,
Mukesh
yes.
Ambani is like.
Definitely can come.
Okay.
Okay.
So they can raise 10 crores,
Oh, definitely, sir.
their own money.
Definitely yes. He gives a declaration that it is his own money. No,
Yeah,
yeah, no worries, no worries. What is the worry in that, sir?
No penalty,
No,
nothing.
no, nothing. Why should there be? No, there is nothing.
भाई का मन है नहीं है बताइए भाई का बहुत
It is not. There is no. Because once it is not a deposit at all, then these sections only are not applicable. Where is the question of penalty?
but you have to follow the procedure.
No, not required. Procedures also we follow only when it is a deposit.
No, this procedure that
Yeah, this declaration procedure, that's it.
that we have to follow.
That you have to follow. That only one procedure.
Yeah.
Because if you go to procedure, it's a very big topic, procedures and all. But we need not follow all those procedures. Just a declaration in detail.
That declaration has to be given.
Declaration has to be given. So one point to remember here is, sir, whenever we go to audit, if at all there is director loan, please ensure that there is a declaration given by him that it is out of his own money. So that declaration has to be there, else it will be treated as a deposit. Yes, sir.
Filings need not to be done for this declaration.
No, DPT 1, DPT 3, nothing. DPT 3, just for the safety, these people do. I mean, we even will just put it in DPT 3 loan from directly.
Usually.
That is just for our own safety,
Okay.
but not required.
Not-
And it is not a deposit, DPT 3 also is not.
Deputy questions are
But it is there in the DPT form.
Yeah, you can discuss now.
Last one.
I'll
We
do.
can keep it as last
Sure.
one. Otherwise we lose the.
Correct. Sure.
The DPT 3 form, exempted deposit, I mean from directors, it is there.
They are
Correct.
asking-
That's just a declaration, sir. Nothing to do with deposit rules. That's it.
But then we need to file DPT 3.
That's what we file every year we file it. But when it is, technically speaking, when it is not a deposit, not required.
So we can contest on
Then why
this
that
point that we have not filed
exempted? They have given that
the
exemption, in that we have to declare it.
Correct. But exempted deposit, exempted deposits are okay, sir. But when it is not a deposit at all, I'll tell you, because I'll tell you. Once we go to the next slides, you know which is a deposit but not an exempted deposit.
Loan from director, is it an exempted deposit or not a deposit?
Not a deposit. Not a deposit.
So we can contest.
We'll come to that. DPT 3 thing we have it. We'll come to that.
So we can contest on this point that
Yeah.
it's not a deposit.
Yeah, it is not 100% not a deposit.
Okay.
Clear, sir? Okay. As I told, we'll just continue with this thing. We'll use the track of that. Clear, sir? Sir, the next part is, this is also maybe in some startup companies you may come across this bonds and debentures. On the liability side, if at all you see, there will be long-term liabilities where they'll have bonds and debentures. Okay. Now the point is bonds and debentures deposit?
Yeah, obviously.
You assume bonds and debentures are deposit, right, sir? But here they give an exemption. They say, under 3 conditions, if you fall under any of the 3 categories, this bonds and debentures, whatever you raise, will not be a deposit. Sir, which kind of bonds and debentures, sir? First thing they say, sir, if at all these bonds and debentures are secured deposits, if at all these bonds and debentures, whatever we issue, if those bonds and debentures are secured, you can issue, will not be considered as a deposit, and these rules will not be applicable. But secured against what, sir?
Tangible.
Secured against tangible, sir. That's the reason I just took up that 3-4 notes. In none of the times you can say it is secured against intangible asset. 100% it should be secured against a tangible asset. Sir, question number 1. Question number 2, just to take a practical aspect. Sir, I raise 10 crore rupees of debentures, bonds or debentures. Okay. I call it as a secured bonds or debentures. What securities are? Let us assume I have a building, okay, office building of this big building. That building I'll give it as a security and I'll raise that bonds and debentures. Possible or not possible?
Security can be third party or should be from same.
No. They say, I'll come up to that. It's a very good point, sir. See here, they say, any assets appearing in your schedule 3. I mean, in my balance sheet, whatever tangible assets are appearing in my balance sheet, only that can be given as a security. Now the point here is, sir, so I'll give a security and I'll raise a bonds and debentures. I can do that. But how would I? The first point is very clear, sir. It should be a tangible asset which is appearing in my balance sheet. Sir, in my balance sheet, let us assume the value of this building is at cost. Correct, sir? The balance sheet will keep all the assets at a cost minus depreciation we would have kept. Sir, cost minus depreciation of this building, let us assume it's a 20-year-old building or a 15-year-old building. The cost minus depreciation today it would have come up to some 5 crore rupees. Now can I raise a 10 crore rupees? But the market value will be much higher, sir. If I sell this building, it is not 5 crores. It would be more than 20 crores, for example. Now, can I raise a bonds and debentures worth of 10 crores? The question is simple. In the balance sheet, my building is appearing at 5 crores. Cost minus depreciation, WDV is at 5 crores. But can I raise a deposit worth of 10 crore rupees, keeping this building as a security? Can I do that or not?
not allowed.
Only the cost will be considered.
Okay, according to your logic, sir, if at all it is secured in schedule 3, I mean in your balance sheet, whatever cost is there, that is the secured amount. With that logic, you cannot raise 10 crores.
So registered valuation certificate.
Sir, because of this, they are giving you some this thing, sir, relaxation. They say it need not be the cost at which it is appearing in your balance sheet. You go to a registered valuer, correct? You get this building valued based on the registered valuer's certificate, whatever amount appears. Sir, because when he values, it may appear at 15 or 20 crores. In that case, keeping that as the base, you can give this as a security.
That means fair market value can be considered.
Fair market value, not on our valuation. It should be by a registered valuer.
Registered value means?
Sir, we have that. No? We would have passed that exams and all, and he'll be called as a registered valuer.
Then only.
Specifically from him, you have to take a certificate. Whatever value he gives, that becomes the amount of the value of this building. That you can keep it as a security and you can raise money. So if at all that registered valuer gives this value of the building at 15 crores, then you can raise that bonds and debentures worth of 10 crores. That will be allowed. Clear? Next example. One important point again here is, okay, that important point will come. So first point, sir, what will not be treated as a deposit is if at all the bonds and debentures are there,
So
if at all those things are.
The logic is the excess money should not amount to deposit.
Now what happens is,
unsecured portion should not amount.
Correct. Now what could happen is, I'll give a 10 crore rupees of building and I raise 12 crore rupees of debentures. Now that 2 crore rupees becomes unsecured.
So in such case, should we qualify it as a deposit?
It will be qualified, so deposit can be secured and unsecured. Both are allowed.
Now to the extent of 2 crore, it is unsecured.
But what Companies Act says is, sir, you cannot split that. They say, if at all a particular deposit is partly secured and partly unsecured, entire amount should be taken as unsecured. So
entire 12 crore is
entire 12 crores will be an unsecured deposit. So that is the point which they come up with. There is nothing known as partly security. Partly secured means unsecured. I'll take up that point. Yes, sir? So the first bonds or debentures which are not deposit is if at all it is secured. Yes, sir? Sir, the second point is, if at all, there are a few startups, sir, as I told you, many of the provisions could be applicable to a startup. Let us assume there is a software company which is a startup. Sir, they want to raise some bonds and debentures. They do not have any tangible assets to give. Now what they tell us, second exemption they give, sir, if at all, bonds and debentures are compulsorily convertible into shares within a period of 10 years. Sir, if at all you issue compulsorily convertible bonds or debentures, compulsorily convertible within a period of 10 years. Sir, you cannot tell compulsorily convertible whenever he asks for. There is a time bound. Sir, you remember first slide we took, any of the deposits should be time bound. Those are the general provisions we took up so that it could be easier here. They say, if at second point is, if at all bonds and debentures you issue, clear, by way of compulsorily convertible debentures, it should be converted within a period of 10 years. With that condition, if you issue, then also it will not be considered as a deposit. Clear? Sir, if at all it is not compulsorily convertible, nor if at all it is not secured, then what? The third thing they say, if at all your bonds and debentures are listed, then if at all it is unsecured, then it is okay. If at all it is listed, we have no worries, it will not be treated as a deposit. So three kinds of bonds and debentures are not deposit. First thing, it should be either secured, okay, by taking a registered valuer's thing, and this security, and if at all, first thing, point. Second point is, if at all it is by way of a compulsorily convertible debentures within a period of 10 years. The third thing is, you are not getting covered under any of these two things, your bonds and debentures should be listed. So if you fall under any of the three bonds and debentures, only then it will not be treated as a deposit, else it will be treated as a deposit. Clear, sir? Sir, the next.
Can there be a scenario where they issue partly convertible debentures, partly compulsory?
No. In that case, sir, you mean to tell I issue two debentures? One partly convertible is in 50% you convert and 50% continues. In that case, sir, half of it becomes will not be covered under this.
So the entire lot would be considered as out of the deposit.
Correct. It is not compulsory convertible. Or else, if at all you want to do that, what you have to do? You have to split into two categories. This you call it as compulsorily convertible. The other category is not compulsorily convertible. Only for this you follow this deposit rules. So this things can be done. Clear? Now, the ninth point, what is not a deposit, sir? They say security deposit from employees. Do we take that? From employees, sir, they forgot directors, members and all. They are speaking about my own employees. From my employees, I take security deposit. Will anyone do that? Generally, have you come across?
They can.
Sir, few of the companies, big companies I've seen, this BCom freshers or whoever will be there, if at all they want to join that company, then they keep some deposit. Keep your marks cards, keep some deposit and then join the company. Sir, that deposit, whatever you take it from the employees, can you take? You can take, but even then there is a restriction, sir. That deposit, whatever you take from employees, cannot exceed their annual salary. Whatever will be the 12-month salary, whatever is there, it cannot exceed that annual salary. First condition, that should be non-interest bearing deposit. You cannot pay interest to your employees on the deposit, whatever they have kept. Two conditions, you cannot pay interest. The second condition is that should not exceed, the amount should not exceed this 12-month salary. If it exceeds, then a deposit. So if at all it is within those limits, then it is not a deposit.
There's no
Sir,
time. code.
suppose he's a landlord. I have taken the private limited company form, private limited company has rented building, okay? And the landlord becomes my employee.
Ah, okay.
It's quite possible.
Mm.
Because he's interested in working in the company also.
Now, here sir, I'll just ask you something.
I hope you understand.
I understand. I'll just ask you something. Sir, there is no restriction on taking money from directors.
Yeah.
We just read.
Yeah.
If I give a declaration, no restriction from taking money from directors.
Yeah.
73 has huge restrictions on taking money from my shareholders.
Okay.
Now, I have a private company where two of you are there.
Yeah.
Both of you are directors as well as shareholders.
Obviously.
Generally that happens. Now, the company borrows money from you. Now, would I think as a loan taken from director or loan taken from shareholder? You are both.
If the document is that it is from loan directors, then it is.
No. If I take a declaration from you and just take it as a director and say it is not a deposit, someone may contest telling that he is also a shareholder. Money taken from shareholders, you have to follow this. So what am I trying to tell is, generally we take it as a loan from director.
Okay.
Similarly, if you have a landlord, you take that money, that is in the capacity of the landlord, not in the capacity or not in relation to my employment.
Where is it written? That landlord is given.
Rental agreement.
There's the employer-employee agreement also.
No, sir. What am I trying to tell is, let us assume you kick him out of the employment. Okay? But you continue staying in this building.
Yeah.
That deposit, whatever you receive or whatever you pay, that is particularly in relation to that landlord-tenant relationship, not in an employee-employee
It
relationship.
should not return.
It should be.
In writing it is employer-employee.
How can that happen? This is how it should be. Employment agreement is separate, rental agreement is separate.
Agreed.
So based on simple, based on whatever nature you take, based on that would be applicable. So if at all it is a owner and tenant relationship, then whatever money will you take will be treated as in relation to that tenancy rate.
Even that owner becomes employee.
Yes.
So this security deposit from employees,
Hmm.
is there any time bound for repayment?
No, it is
As
not.
long as he continues the same employee.
But time bounds are there
He
going
works for
forward.
15 years, I can keep it for 15 years.
Correct, it can be, but going forward I'll tell you, none of these things can be kept for more than 36 months. I'll come to that point, but because you asked, I'll tell you, none of these things can be kept for more than 36 months. Yes, sir. Sir, I'll go to the next part of it. In the course of business, extremely important points, sir. These things, whatever we read now, maybe many of the things you would not have come across in the smaller companies, except for that loan from directors. But this is the one thing where majority of us are missing, or there is an issue with this. First point, sir. They say an advance received for supply of goods or services, provided that such advance is appropriated with the supply of goods or services within a period of 365 days. Forget the section, let me tell you what it is. Let me explain. Sir, they say, suppose I am running a company, I am into selling of goods, correct? Sir, you are my customer. I take an advance from you for supply of goods. Possible or not possible, sir? I tell you, you give me advance, only then I'll supply you goods. Sir, the advance, whatever I take, within the next 365 days, I should supply the goods to you, and that advance, whatever I've taken, should be adjusted against the same. If I don't supply the goods or services and continue to keep this deposit over a period of 365 days, that will be treated as a deposit. Just to give you a practical example, sir, wherever you do an audit, you will have on the liability side, you have advance from customers. Definitely, many of the companies would have this. One big annexure will be their advance from customers. So, take an aging. Any of the advances you have taken and not appropriated it within a period of 365 days, you take advance from customers aging. If anything has exceeded 365 days, then that will be treated as a deposit. I hope many of the companies are violating this. Wherever we do statutory audits or internal audits, we catch out of this.
What is the
If you refund on 360 days,
You refund it?
substance,
You can, sir. You can. Sir, appropriated against sale. If at all sale doesn't take place, then you refund.
Within 365.
Within 365 days. It should not exceed 365 days and stay in your books as that money is with you. That money should not stay with you.
So, but can we show it as a security deposit from customers?
You can, but the nature of agreement should show that. That should not be for an advance for supply. That should be as a security deposit.
But we are appropriating security deposit against this consideration.
Can be done. But original agreement and the original grouping should be as a security deposit.
You take a security deposit and then it's a running account continuously.
That can be done, sir. Security deposits many companies takes.
Not
Bank
interest
guarantee.
bearing. Should not be interest bearing.
Yeah, it should be non-interest. I'll come to that point. Yes, sir. Sir, one thing from an audit perspective, I'm telling you, whenever we go to audit, we do that, sir. Advance from customers, we take an aging. Wherever more than 365 days are there, we immediately ask them to refund it or check if supply has been made and adjusted. Sir, if the customers are run away, many of the cases, sir, in order to refund, he is not there, sir. Some chota advances he gave, 10,000, 15,000 advance he gave and he is not there. Sir, at least bring it to your P&L account as other income, pay GST on that and give it there. You cannot carry in your books as an advance more than 365 days, provided it is under litigation. Maybe sometimes things would be under litigation, hence we do not refund it. Only in the case of litigation, you can continue to keep it. If there is no litigation, in normal circumstances, you can.
Litigation is any litigation.
Any litigation. It should be litigation. But just not that over the phone call we fought, not like that. But it should be an actual litigation.
It should be the court some.
Correct. Court or whatever it is. It should be litigated. Yes, sir.
The FIR is necessary also.
Not FIR. They just speak, it should be under litigation, disputed bids. It can be under any authority. Yes, sir. So the next part they say is very important point, sir. The second point is also, if at all you receive any advance in relation to an immovable property, then it will not be treated as a deposit. But the condition is, sir, that advance has to be adjusted against that immovable property. See, if you receive any advance, I being a company have a building, in order to sell that building I receive an advance. So that advance will not be treated as deposit, provided that advance whatever you take has to be adjusted against the amount in relation to the sale of building. Only then it will not be treated as a deposit. Clear, sir? So third point as
Any time bound for that?
no, nothing.
Nothing.
Nothing. Nothing.
You can go more
Time bound is there, but generally no. I'll come to this. Generally no. Yes, sir.
agreement
Sir.
can be renewed.
Can be. So the third point they say is the security deposit for performance of a contract for supply of goods or service. Sir, as you told, many of the companies who take security deposit, not advance, sir. I hope I'm clear. Not advance for supply of goods. As a security deposit, they'll ask you to keep some FD or something as a security deposit. That security deposit, whatever you receive, will not be treated as a. Sir, let me ask you one simple.
Retention money in case of contract.
Retention money or security deposits. These things will not be treated as a deposit. Sir, but one practical scenario which we face with the clients, I tell you. Sir, our client was into manufacturing of dam walls. You know dams, no, sir? When dams are there, they open these gates and all. And they open the gates, the water flows. Sir, that valve which closes and opens the gate, that valve they were manufacturing. It used to be like this big, the size of this room or something. They used to manufacture that. When this companies that came up and advances came up, sir, they said, we take on an average 1.5 to 2 years in order to manufacture one valve and supply. We don't do it immediately, but you have to pay me advance because we are doing such a big project. We don't do it without an advance. We take advance from the people, but whatever advance we take, we supply the goods only after 2 years. But the point here is, sir, if you look at the first point, whatever we read here, any advance you take for supply of goods or services, that has to be appropriated within a period of 365 days. But what would these people do? This was a practical scenario we faced. First point, very simple data. Any advance you take it from a customer, within 365 days, either you refund or adjust it with the supply of goods or services. So here, my nature of goods is such that I take 2 years or 1.5 years to manufacture that and supply. Then what happens to that advance I've taken from a customer? Now, can I call it as a deposit?
Even in case of ships, it will take that much time.
Correct.
Ships and aircraft.
But what do we do now? Such kind of companies, if at all you come across, what do we do now, sir? Should we refund it? Who will refund, sir? Companies will be like, forget companies that, who will refund that huge amount because the 365 days has crossed. Correct, no, sir? Sir, hence we have this point number 4. The reason I asked you is, for that solution was point number 4. So point number 4, they tell, any advance received under a long-term project as I told you, which goes up to like 1.5 to 2 years. Any advance taken on a long-term project for supply of capital goods, except covered under section point number B. Point number B was that building immovable property. Apart from immovable property, if at all you are supplying any capital goods, which is a long-term project, and you take some advances, that's okay. You need not worry about it. It will not be treated.
Revenue recognition will not work here.
No. Okay. It's pure advance they take. They manufacture a good, they supply it within a period of 1.5 to 2 years.
And that is the normal procedure.
Normal procedure. So you need not worry if at all your company is having an advance from the customers of more than 365 days, but the nature of that company is such that they take long term in order to complete that period. Not to worry, sir. There is also exemption for that. That will not be treated as a deposit.
The operating cycle is it?
Operating cycle. If the regular operating cycle is 1.5 to 2 years, that's okay.
Even 5 years it can be.
But it should be justified.
No. Suppose the nature industry like
It can be. Yes, sir.
So real estate developers also this thing will be there.
Correct. But they come under point number 2, supply of immovable property.
realistic.
Yeah. Sir, the next point they speak about is point number
So
E.
suppose this you cover the space shuttle everything.
What sir?
Space aircraft, space shuttle.
Anything for that matter. Long-term projects which takes more time. Everything is covered.
Normal business.
Correct. Sir, the next point they speak about is any advance towards consideration for future service. Sir, have you come across this, sir? Where they take up this money for annual maintenance in the beginning itself? Sir, we do know if you buy a car or if you buy a machinery or something, they say we'll sell it to you today, but you give us some extra money. This money is not my income, but I'll give you this thing, free service, or whenever you come, free maintenance for the next 5 years, next 6 years, up to 8 years, free maintenance. But you give me the money now, or they'll tell it's under warranty. You give me some 50,000 rupees now. Next 8 years we'll cover it under warranty. Whatever happens in the next 8 years, we'll replace it free of cost. Sir, these kind of money, whatever you take, this 50,000 or 1 lakh, for maintenance contracts or under warranty, will not be treated as a deposit, sir, provided the period for which you give a warranty or maintenance should not be more than 5 years. There is one more catch here. Or they say, here you see, sir, 5 years, as per the common business practice, whichever is this. Now, example, laptop. I buy a laptop worth of 1 lakh rupees. He says, sir, pay me another 25,000 rupees. For the next 5 years, your laptop maintenance and warranty is free. Correct? But that money of 25,000, whatever I give it to him, 5 years is okay. But laptops, sir, generally the life of laptops is 3 years. Or the general business practice which speaks about it is any warranty of laptops will be covered by 3 years. Sir, now he can take that money, it will not be treated as a deposit only till 3 years. Though the company is at 5 years, he will be covered under that only up to 3 years. Clear, sir? The last thing, sir, okay, sir, any advance received or allowed as per the central government, secretarial this thing as per central government. Last thing, any advance received for subscriptions. Sir, if at all you are subscribing for something, if you receive an advance for subscription, that's okay. It will not be treated as a deposit. Clear, sir? Sir, the next important points I'll take up, it's already 11, I think, another half an hour left. So I'll just wrap up fast. Sir, next point which is not a deposit is money taken from promoters. Sir, who are these promoters?
Founders or initiators of the company.
Directors, other than directors.
Initiate the idea.
Basically, sir, Companies Act tells promoters is someone who may or may not be a director, who may or may not be a shareholder.
Correct.
Sir, there are circumstances where a particular person is a promoter, but he is not a director nor not a shareholder. He can also be a promoter, correct? Sir, if you take a money from promoter, it will not be treated as a deposit, provided there is some condition, sir. They say that has to be in relation to a loan taken. Sir, what does that mean, sir? Let us assume I have a company, there is a promoter. That promoter approaches a bank, he asks for 1 crore rupees of loan. Sir, some of the banks, what they tell is, they ask this promoter to pump in the money first in the company, then they pump in. They say, you pump in some 20 lakh rupees in the company, the balance 80 lakh rupees, whatever is there, that we fund it.
Margin money.
Margin money. Sir, it can be such kind of a condition. They say, this 20 lakh rupees, whatever the promoter puts in the company, will not be treated as a deposit, but here there are many flags. What flags? Sir, this 20 lakh rupees has to be repaid back to the promoter before the expiry of this loan period. Some of the cases, what is happening, I'll tell you. This 20 lakh rupees, they take it from the promoter. They take a loan for 10 years. They'll repay that loan. But this 20 lakh rupees, whatever is pumped in by the promoter, that stays in the company forever. Sir, that cannot happen, sir. If at all you take it from the promoter, once you close the loan in the next 10 years here, this promoter money also has to be refunded. With that condition, it will not be treated as a deposit. Hence, if you continue to hold this money even after the repayment of the loan, it will be treated as a deposit. Clear, sir? So next point, Nidhi companies. Anyways, Nidhi companies are exempted from this deposit rules because their main activity is only taking money or this thing. So whatever money they take will not be treated as a deposit. Clear? CA, sir, collective investment scheme under SEBI. Sir, as I told you, wherever there is SEBI, RBI coming up, Companies Act is keeping silent on those things because SEBI rules takes care of this collective investment schemes. So it is covered under SEBI, and under Companies Act it will not be treated as a deposit. Yes, sir? This is an important point, sir. Startup companies, sir, many of the startup companies, they would need money. Okay, other than shareholders or this thing, they raise money by the startup companies. Sir, startup companies, in order to facilitate startup companies, they have kept this. Startup companies issuing a convertible note will not be treated as a deposit. Sir, first of all, main point here. What is the startup company? Because there is this culture nowadays. Whoever starts a company, which is a very new company, they come and tell, sir, we are a startup. Correct, sir? Any company who have just started, they say, sir, we are a startup. Now, everyone calls themselves a startup and take an exemption under this. I issue a convertible note and I'm not covered in the deposit. That becomes a problem. Sir, any company which has just started is not a startup, sir. Companies Act specifically says that company has to be registered as a startup under DPIIT. Only if I register under that, only then here it is. DPIIT, if they are registered, only then they will be recognized as the startup. Okay, sir. That startup company issues a convertible note, but here there are conditions here, sir. That convertible note, whatever they issue, the value of it should be minimum 25 lakhs from one person. They cannot tell small amount I'll collect and 30 lakh rupees I'll collect. They cannot do. From one single person, they have to issue commercial notes and they have to, convertible notes, and they have to raise a minimum of 25 lakh rupees. Clear? And which is compulsorily convertible into equity shares or repayable within a period of 10 years. Sir, here, if at all you're a startup, you raise convertible notes and raise money. Minimum money you raise should be 25 lakhs. And that money you have to repay it within a period of next 10 years, or within the next period of 10 years you have to convert it into equity shares. Either one of the things should happen. Else it will be treated as a deposit. Clear, sir? Last point, sir, very simple point. They say amount received from alternate investment funds. Sir, again, alternate investment funds and other things are governed by SEBI or other regulations, so hence they are keeping quiet on this. So alternate investment funds, the main activities are only to raise money and do this. So these people are exempt from this provisions of deposit. Clear, sir? So just to recap what we just read over the last 1 year or 1 hour or so, whatever we read was all the 16 items which will not be treated as deposit. Sir, if you look at the definition, sir, you look at the liability side of the balance sheet, sir, anything other than these 16 points will be treated as deposit, and that will be covered under this provisions. Now going quickly to the next provision, sir, section 73. Sir, I told you I'll cover two sections, section 73 and 76. Sir, section 73 is deposit raised from members. 76 is deposit raised from public other than members. So let me cover up section 73. Sir, 73, which categories of companies are covered here? Private or public? Private or public, sir, section 73?
Public limited.
73, both private and public are covered here, sir. Both private and public, section 73 is applicable because you are raising money only from the members. Because you are raising it from the members, then this section will be applicable. Clear, sir? Sir, what do they tell? A company may subject to the ordinary resolution. Sir, if at all you want to raise money from the members, sir, one point where we are missing out. If you are raising from the public, then you require a special resolution. If you are raising money from the private company, then an ordinary resolution is, from the members, then an ordinary resolution is enough. I'm just telling you the procedures of it. We'll come up with the rules where they say the important points. Clear, sir? You raise money from members. Initially, you pass one ordinary resolution and file it with DPT 1. Sir, annually we file is what? June 30th, what we file annually is DPT 3. That is just a regular return, annual return we file. But whenever you take money from the members, at the time when you take, you have to file. That we call as DPT One, we have to be very careful, sir. If at all you are not covered under the exemption list and you are raising money from the members, then you have to file this DPT-1. Ensure that DPT-1 is filed. Sir, whenever they are filing DPT-1, along with DPT-1, they have to be giving this financial position of the company. Clear? Credit rating. What is credit rating, sir?
Like care rating.
No. From a credit rating agency, you take what is the rating of this company, like that. So you take a credit rating report that you attest here. You have to give details about total number of deposits, amount due, whatever is there, and other particulars as may be prescribed. Sir, let me not go into what is DPT-1 at all. Let me cover up the important points here. So, anytime you raise money from the members, you pass an ordinary resolution and then file DPT. Sir, one important point here is within 30 days you have to file it. Sir, this is one very important point, sir. This thing. Sir, many of the things wherever we are making a mistake is, sir, let us assume, sir, in 2020, I raise a deposit from members. I file one DPT-1 then. Sir, is that enough or every year should I file?
Every year.
Once if I file, is that enough or how is it? Companies Act, sir, here the rules come up. They say every DPT-1 or circular, whatever you give, will have a validity that expires. What validity, sir? Sir, they say within a period of 6 months from the end of the financial year. From the end of the financial year, 6 months means by September 30th. Or whenever you conduct an AGM. Or if you don't conduct an AGM, the due date for AGM. Sir, whichever is earlier, only then you have this validity. Sir, after that, whatever circulars you issue or whatever resolutions you pass with the members, all those things comes to an end. You have to do it again. Why, sir? Sir, just looking at here, they ask you for financial position. Sir, won't your financial position change every year? Or won't your credit rating changes every year? Hence, they have given a validity, sir. It is not that 10 years back I raised the money. Sir, first of all, deposits cannot be taken for 10 years at all. I'll come to that. Maximum period what you can take deposit is only 36 months. None of the deposits can be taken for more than 36 months. Whatever company you are, correct, sir? So they say this is the validity of that circular or DPT-1, whatever you file. After this, fresh circulars have to be issued for each succeeding years. This is one important point. You have to file it with ROC within 30 days. Sir, very important point is this. Sir, have you heard of this deposit repayment reserve? Most wrongly interpreted section this is. What is it, sir? Deposit repayment reserve. Simple, sir. They say, if at all you raise some deposit, let us assume, sir, I raise some deposit of 50 crores, okay, which is repayable in the next financial year. Now we are in 24-25. In the next financial year, that is 25-26, I have to repay that 50 crore rupees. Sir, they say this year, before April 30th, you have to create in a separate bank account one deposit repayment reserve. Sir, how much do I create, sir? Sir, they say next year, how much ever is due, 20% of that you put it in one separate bank account and you call it as a deposit repayment reserve account. Now, in the example which I took up, I raised 50 crore rupees, which is repayable in the next year. Sir, this year, before April 30th, April 30th, 24, I have to, 20% of 50 crores is how much, sir? 10 crores. 10 crore rupees I have to keep it in one bank account. Sir, what do I do with that bank account? What do I use that money for?
For redemption.
For repayment of that deposit. Sir, now what will I do, sir? 10 crore rupees before 30th April, I kept it in one separate bank account and I start repaying the money out of it. Sir, there is one more condition which says, at any point of time, this money, whatever you have kept, should not be below 20% of what is repayable in the current year. Let us assume, sir, next year 50 crore rupees I have to repay. Current year I have to repay 40 crores. Let us assume 40 crores, 20% is 8 crores. Sir, this 10 crore rupees you may utilize for repay. But at none of the point, this 10 crore rupees should come below 8 crore rupees. So this is the point they say.
You constantly replenish.
You replenish, but none of the time it should come below 8 crore.
You can use it before that.
Yeah, you can. But moral of the story is that anytime you take a deposit, ensure next year if at all it is repayable, you have to create a deposit redemption reserve this year of 20%. This you have to check in the balance sheet, sir. If at all there is a deposit, check when is the due date for repayment of that and check if there is a reserve created in the current year. Sir, having a deposit repayable without a reserve amounts to violation of this section.
Penalty?
So what if enough profits are not available with the company and they plan to repay it with the issue of further equity?
Ma'am, then they have to take measures to convert it into equity shares now. convert it into equity, or else what happens, I tell you. If you delay in paying, the members have all the right to go to tribunal. There is a penal interest of 18%. There's a penal interest they speak about, that 18% gets attracted. So this is one major thing that happens.
DRT also.
NCA. NCA, they go to NCA. Right, sir? So next thing, as I told you, important point I'll just take up. Sir, this point I think we have already covered, sir. Any deposit you raise with the security will be called as a secured deposit. Sir, anything partly secured, partly unsecured, entirely we call it as an unsecured deposit. Sir, what if it's an unsecured deposit? Let it be an unsecured deposit. They say, sir, in any circular, any advertisement, financial statement, wherever you mention that deposit, next to it you have to specifically mention unsecured deposit, unsecured deposit. So any readers looks at it, they have to know that it is an unsecured deposit. So they tell if at all it is secured, fair enough. You give a security registered under register of charges, all those things you do. If at all it is an unsecured deposit, wherever you mention the deposit, you mention it as it is an unsecured deposit. So that's a major provision they speak. Clear, sir? Okay. I'll just come to the other provisions, sir. Rules I'll just come. Sir, one of the important rules, deposits, they speak three things, sir. Sir, maximum limit is what? I take a deposit, I have to repay it within
3 years.
No.
36.
36 months. Sir, I take a deposit. Maximum time I can hold the deposit is only for 36 months. That is the maximum. Sir, is there any minimum period? Companies Act prescribes a minimum period also, sir. Sir, they say any deposit should not be repaid within 6 months. You take a deposit, you cannot repay that deposit within a period of 6 months. Minimum you have to keep it for 6 months, but maximum you can keep it only for 36 months. This should be the period of deposit. Sir, even though they have complied with all the provisions, all the circulars, all this DPT1, everything they have complied, but you look at the period of the deposit, sir. In audits, if at all the deposit is, they are holding it for more than 36 months, then that's a violation. None of the deposits can be issued for more than 36 months and it cannot be repaid within a period of 6 months. But there is a condition, sir. The members, the deposit holders, always have a right to demand that deposit back. What do you mean by that, sir? Sir, let us assume I issue a deposit for a period of 36 months. Sir, let us assume now it is 24 months. Sir, immediately after 24 months, members comes up and they'll be like, give my deposit back. Sir, they have all the right to ask for a deposit. Sir, now what happens, sir, if they ask? Should we have to repay?
Yes.
Sir, I issued deposit, sir. I took a deposit for 36 months. I told I'll repay it to you after 36 months. After 24 months, still 1 year is there. Now the members come and they'll be like, please repay my deposit. Should I have to repay? They say you have to repay. Because the condition they say here, sir, any deposit is always repayable on demand. The deposit should be that it should be repayable on demand. But one relaxation they have given. What do they tell, sir? Sir, let us assume for 36 months I fix a rate of deposit at 9%. You see, banks they'll give you, if you keep FD for more than 3 years, this is the rate. If you keep for less than 2 years, this is the rate. Sir, if at all you have such kind of a provision, for 36 months I promise them that I pay them 9% interest. Okay. Now immediately after 24 months, they come back and they'll ask for the money. Now, sir, I'll show them the chart, like bank FD rates, however they give. In that, if at all it is written, 24 months the rate is only 7%. Okay. I recalculate that interest. Now for 24 months they're asking me back. Now for 24 months, what is the rate, sir? 7%. From that 7% also I'll deduct 1%. Companies Act has given me that power. I'll deduct that 1% and I'll repay them only the balance 6%, whatever is there, only that I'll pay. If at all they come and ask me earlier. Yes, sir? But you have to pay.
2 years which we have paid extra will take back that also.
You adjust.
Okay.
You recalculate and while repaying the deposit, you adjust and you repay. That is the provision. Clear, sir? Now this is the point. And one more thing. Sir, how much can I take, sir, deposit from members? Irrespective of limit, can I take? You ask me, no, sir, directors. 10 crore rupees can Ambani take. Now, like coming to members. From members, how much ever I want, can I take so much of deposit? Not allowed, sir. Sir, section 73 says you can take maximum of 35% of your paid up share capital plus free reserve plus securities premium account. You total up your paid up share capital, free reserve and securities premium account. Sir, totals 35% is the maximum that you can take it as a deposit. Clear, sir? But however, there is an exemption to private companies. Private companies can raise up to 100% of the paid up share capital plus free reserve plus securities premium. If at all you are a public company, maximum 35%. If at all you are a private company, you can raise up to 100%. Clear, sir? So this is coming to the amount. Sir, first we told period. What was the period, sir? I'll just wrap up. Period minimum 6 months, maximum 36 months. And what is the amount you can take, sir? If at all you are a public company, maximum 35%. If at all you are a private company, you are exempted and you can take up to 100% of your paid up share capital and free reserve. Third thing, sir, what is the interest that I can offer, sir? Can I offer them 4% per month? I have so much of money. Can I offer my members that on the deposits you keep, I pay you 3% per month, 4% per month? Is that allowed to or not? Not allowed, sir. Sir, what is the rate? They have not given any specific rate as such, but what do they tell us, sir? Any rate that is prescribed by RBI for NBFCs. You know, non-banking financial company. Sir, for non-banking financial company, what is the rate that is prescribed by RBI? Clear? That is the maximum interest that you can pay to your members. So we are clear with the tenure, 6 to 36. We are clear with the amount, 35% or 100% in case of private company. How much is the interest that I can give? I can pay a maximum of the rate which is prescribed by RBI for NBFC. That's the maximum interest that I can give it to members. Clear, sir? Sir, the next point they tell us, similar to directors, members are also allowed, supposed to give a declaration that whatever deposits they are giving, it is out of their own money and not from any borrowed capital. Clear? The fifth rule they say, sir, hey, can I take a joint deposit? You can take, sir, you are allowed. But here also they put a restriction, not more than 3 joint holders. So maximum 3 people can together come up as a joint holders, they can deposit, not more than 3. That is the rule they have told. One more thing they have told, sir, anytime you receive a deposit, sir, one important point for statutory audit, anytime you receive a deposit, that deposit, within 21 days of receiving the deposit, you have to issue them the deposit receipt. Maybe we are missing out on this. Wherever there are deposits, there are no deposit receipts issued. We have to ensure within 21 days of taking the deposit, they have to issue this deposit receipt. That's a rule they say. Okay, sir. Premature deposit, we just spoke about it. Sir, annually, we just spoke about this also. Before June 30th, we have to do this DPT3 filing. DPT3 is where all the details regarding the deposits, outstanding deposits, as on the 31st March of the year, you just give it to them. So that is your DPT3. That rule we have done. Okay. One important point, sir, no alteration of terms and conditions. Sir, maybe sometimes you give them good pictures and you take a deposit. After you take a deposit, you change the rules and regulations. You see how bank does. Whenever they are lending interest loans, many of these NBFCs does. They say, sir, housing loan very cheap, 7% will give you housing loan. Once you take within a period of 3 months or 6 months, they tell you, so no sir, now it has increased to 8. Another 6 months, they'll be like, no sir, now it has increased to 9. So these kind of changes you cannot do. Once you take a deposit, then you cannot start altering your terms and conditions, which is prejudicial to the interest of the members. You cannot do that. Clear? Penal interest we just spoke. If at all you do any mistake here, then you have to be paying a penal interest of 18% per annum. Lastly, coming to your penalty, sir, penalty for contravention. Sir, they say penalty for any of this officer in default, they'll ask 5,000 rupees, and for continuing default, 500 rupees. Okay. So this is a smaller penalty, small procedural error, but we'll come to a bigger penalty. If at all you err in these kind of things, what will be the penalty? Clear, sir? Sir, these are the rules relating to deposits taken from members. So major points to remember, sir. DPT1 we have to just to wrap up. DPT1 we have to be very sure about it, correct? And second thing is period. It should not be more than 36 months old. Any deposit should be 36 months. The interest should not be exorbitant interest. You cannot pay. That RBI NBFC interest you have to pay. Clear, sir? These are the main important points what we'll have to see. And declarations we have to see whether they've taken declarations that the money is from own money and not from borrowed capital. These declarations we have to take. So these are the major things which we have to observe during our audit. These documentation should be there. And we have to check whether they've issued receipt within the next 21 days of taking the deposit. So these things, main points are deposit redemption reserve have been created. If at all any deposit is repayable next year, this year they have to create a deposit redemption reserve. If not, that's a violation. Clear? Just to wrap up, this is your section 73. Sir, 76 is very similar to your 73. Okay. 76, sir, 73 is what? You take deposits from members. 76 is very similar to 73, but 76 you take deposit from public. Sir, who are allowed to take deposit from public? Question number 2. Can private companies take deposits from public?
No.
No. Public companies?
Yes.
All public companies?
Listed.
No. Again they say, sir, eligible public companies. What is this eligible public companies? Again, you should not be of the notion that once I am a public company, I can take deposit from public however I want. No, sir. Even here they say, if at all you want to take it from public, you should be an eligible public company. Sir, who is this eligible public company, sir? Eligible public company is one who has a net worth of more than 100 crores, greater than or equal to 100 crores, or you should have a turnover of more than or equal to 500 crores. Sir, only if you are a public company of that size, you are allowed to take deposits from public. Right? Not all public companies can go raise money from public. If at all your first condition is definitely you should be a public company, your net worth should be at least 100 crores, or either one of the things it is complying also, you can just go ahead and take, or your turnover should be greater than or equal to 500 crores. Only these category of companies will be called as eligible public companies, and you are eligible to raise money from the public. Clear, sir? Now, if at all you have to raise money from the public, sir, all the rules are very similar, but one change here. We pass an ordinary resolution if at all you are raising money from the members, but if at all you are raising money from the public, you pass a special resolution. So that's the only difference. Other than that, DPT 1 filing, all those things are very similar. Tenure, 6 months to 36 months, tenure is same. Clear? That upon your maximum tenure 36 months, rate of interest, all those things are same. But one very important point here, sir, if at all you are a public company and you are raising money from public and it's a secured deposit. Sir, what is secured deposit? Giving you a security for the amount taken. Sir, if at all I am a public company, I am raising money from the public, there will be 500 depositors who will be depositing in my company. Right? I have one big building. Fair enough to cover that amount. But will I go register that security in each and every depositor holder's name? 500 people, can I go deposit, give it as a security to each and every person? Trustee. So in that case, sir, public companies, what they do is, they create one, this thing called as depositor trustee. Sir, one major important thing is depositor trustee should be created by the company. One confusion what people think is, members need the security, members all put together will create one depositor trustee. No, sir, it's the responsibility of the company that he has to create one depositor trustee. Correct? That depositor trustee will be responsible for this securities. So we'll register that security with the trustee. So this is how the things work. Yes, sir. This is one additional point which comes up when you compare section 73 to 76. Correct? Depositor trustee point. Sir, other things are very similar. The credit rating things, whatever you take, DPT 1, whatever you file. Sir, all these things, I think 73 it is a copy paste. Interest, how much you can give, it's a copy paste. Declaration, whatever you take, it's a copy paste. Or the joint depositors, not more than 3 people, it's a copy paste. Clear, sir? One additional thing what comes up here is, again, depositor trustee is one point. The second point what comes up here is, you have to maintain a register called as deposit register, where you give all this particulars, name, address, PAN of the deposit holders, how much is the amount of deposit you have taken. So all these things you gave up. So that one register that comes up additionally. So all other things are very similar to your premature deposit. We covered that 24 months if at all you have to pay, deduct 1% and pay. That point we have covered. Clear, sir? On 30th June you filed DPT 3 with the ROC. Similar. Sir, all these things are very similar, sir. Clear? The only thing different from section 73 to 76 is, just to remember, here it is one special resolution is one thing. For secured deposits, you have to create a depositor trustee. Second thing. Third thing is you have to maintain one register. So only these 3 things are same. Other amounts, limits, all the procedures are all very similar to section 73. Clear, sir? And the last section what we'll be covering is penalty for contravention of section 73 or 76. So if at all you contravene any provisions of section 73 or 76, this is the penalty, sir. they say penalty, company shall in addition to payment of the amount of deposit or part thereof and interest due shall be punishable with a fine from 1 crore or 2 times the amount of deposit whichever is lower, or maximum is 10 crores. So you look at the amount, sir. 73 to 76, if at all 73 or 76, you violate, what is the maximum penalty, sir? 10 crores is maximum. Minimum amount is how much, sir? Minimum they tell either 1 crore or 2 times the amount of deposit whichever is lower. That is the minimum amount, maximum amount is 10 crores. Sir, this is for the company. Clear, sir? In addition to company, there will be an officer in default. The officers who will be there, they will also be imposed with penalty. What is the penalty, sir? They say jail up to 7 years. And it's not a or, sir. Definitely they'll go to jail for 7 years. And they say 25 lakhs to 2 crores. In their hands, their minimum amount is 25, maximum amount is 2 crores. That is a penalty for officers in default. So for company it is 10 crores maximum. Officers it is jail, pakka, plus 2 crore rupees of penalty. So it is extremely important that we know 73 to 76.
Auditors will not be under officers in default.
No. Unless we are involved in that fraud.
Defaulting auditor.
Unless they are
We are involved in that fraud. Like Satyam, scam and all, if at all we are involved, they'll put us also in jail. Or else nothing. Sir, for that matter, individual return filing also, they are asking a document in that they specify which accountant assisted you in filing.
Correct.
Auditor name comes up, but I'm just telling you, if at all you have a wrong certification at all, your membership will be cancelled, all those things will be there. But Companies Act addresses this thing, officer in default and your company. Yes, sir? Sir, 74 may not be very relevant because they told deposits taken before the commencement of this act. It's already been like 11 years since we started this act, so may not be relevant for today. Clear? So the major provisions we have to remember is your 73, 76, 73 members, 76 public, 76A penalty provisions, and that section 2, what is a deposit, what is not a deposit. Sir, according to me, 73, 76 are procedural aspects, but main focus during audits should be what is a deposit and what is not a deposit. Yes, sir. I hope the first 16 points, whatever we read, which are not deposit, that gives a clarity as what is deposit and what is not a deposit. Clear, sir?
Yeah.
So that's it from my side. If at all there is anything, any questions from your end, we are ready to discuss. Right, sir. I hope it's clear. Thank you.
Thank you, Srihari, for that. I have made more of the things clear with regard to deposits. So may I call upon Chairman Pramod to hand over a memento to the Speaker.